And therefore, I've changed my bearish stance, my call for 70, 75K Bitcoin to one where I think now we can, surpass 100 through 110, the previous all-time high, and go much, much higher.
ETH versus SOL, which one do you think wins long term?
I think ETH still has a possibility to win long term just because there's so much hate. And so usually when something is super hated, then it's the best performing from that point in time. Bold predictions. I think still the bold prediction is $250,000 Bitcoin by the end of the year. I think a lot of people are a bit scarred from this natural, healthy correction during a bull market, but we're still in it. It's still money printed. We're going higher.
Let's start with what's more likely, Bitcoin above 100K or back below 80K?
Above 100K.
Really? Okay. Why?
So I was parsing the statements of Powell at the recent FOMC last week, and I think there were three major changes in their stance, which honestly I didn't really expect to happen this quickly or with only the S&P down 5% or 10%, whatever it is. So the first thing is, I lay the context that I believe that the U.S. economy is very strong. Whether it's due to like fraudulent government payments or not is kind of irrelevant at this stage. Real GDP growth is growing, unemployment is low, and the U.S. stock market has been doing very, very well, post the lows in 2022. And against this backdrop, the Fed had printed something like $4 trillion between COVID and now. They've reduced their balance sheet by about $1 trillion. Inflation, at least according to their made up bullshit statistic, core PCE, is still above their made up bullshit target of 2% a year. And so, if you look at all these factors, there's no reason why the Fed should be cutting rates and or slowing down the pace of balance sheet runoff. It's a quantitative tightening. Yet they reduced QT in June of 2024. And yet again, Powell got up last week and said that they'll be reducing the pace of QT for Treasury bills from $25 billion to $5 billion per month. And I think that's very instructive because obviously there's a problem in the Treasury market. There's too much supply. A lot of the inelastic buyers like China and other large exporters are no longer participating in the same way that they used to, given the surpluses that they're generating in their trade account. The Fed is letting the treasuries mature off of its balance sheet, so it's not buying. And the commercial banks can't buy anymore because their balance sheets are full due to the capital charges they take when they buy treasuries. So, Besson has a problem if he's going to get these 10-year rates below 4% or whatever he believes is the target. It's just not going to happen given this backdrop. And Powell stepped up to the plate, did his duty as a member of the TradFi establishment, and reduced the pace of QT when the U.S. economy is strong and inflation is above target and monetary conditions are very easy. And so that's a signpost that whatever things he's looking at, and I don't know what it is, he believes that there's a problem and he needs to make things easier in the treasury market to fund these gargantuan deficits. That's the first thing. The second thing is he said something quite interesting, which was he teased that he'd be starting quantitative easing or actually outright buying of treasuries at some point in the year. The statement was something to the effect of he could see in the near future, but not a definite, that the Fed's balance sheet could be kept constant. However, the $35 billion of mortgage-backed security runoff could be matched with a $35 billion per month purchase of treasuries. So technically speaking, it's not QE. Maybe it's like QT twist, right? I sell down on one hand and I buy on the other. But as crypto traders, we care about liquidity into the treasury market, the most important debt market in the world, and how this money printing machine is fired up from America. And so he's saying, I'm going to be doing QE of $35 billion a month, TBD, but probably I would imagine within the next few meetings. Because why would he say that at the press conference to sort of see the market's reaction to essentially QE for treasuries? And then finally, everyone's worried about tariffs. Are they inflationary? Is it, going to cause all this mayhem in the markets? And what do we care about as crypto people? We care about money creation. So if tariffs are inflationary, does that mean that the Fed has to then raise rates, increase the pace of quantitative tightening, stop QE, whatever, right? Make monetary conditions tighter because there's a big inflationary impact of tariffs in the domestic U.S. economy? Powell said he looked through the impact of tariffs. If there is any inflation, it's transitory, which basically means if I'm cutting rates and easing monetary policy, even if Trump does a 50% tariff and inflation skyrockets in the US, I believe that that doesn't exist in the medium term. Therefore, I can continue cutting rates and or doing quantitative easing. So we now have QT to QE, and we've said that tariffs don't matter in terms of inflationary impacts in the US economy. This means it's game on. This is a similar vein. And I know people have been shitting on me on Twitter when I made this call. Like, oh, it's not technically QE and blah, blah, blah. Well, in 2022, Bad Girl Yellen, former US Treasury Secretary, said, fuck you, Powell. I'm going to ease monetary conditions. I'm going to issue bills and take the reverse repo facility down from $2.5 trillion down to zero. And so if you were stuck in this mindset of, oh, the Fed's raising rates and doing QT, therefore asset markets must go down. Well, Janet Yellen has a bigger bazooka, and she said, no, I'm going to take that $2.5 trillion and pump it into the markets. And you would have missed the massive bull market in everything, crypto included, from late 2022 up until the present. And so I think people could be making the similar mistake today. Yes, short-term rates are 4% or whatever they are. Yes, technically he's doing QT, but for the thing that matters, U.S. Treasury market liquidity and how much of that is pumped into the global markets, Powell is telling us that he's going to be switching to QE, and he doesn't care if Trump does some 20, 50, 30, 70% tariff across the board, because any inflation in the U.S., is going to discount that and continue doing what he's doing. It's easing monetary policy. So I think this is a big sea change from the U.S. and a pivotal moment in terms of how this particular microcycle is unfolding, and therefore I've changed my bearish stance, my call for 75K Bitcoin, to one where I think now we can, surpass 100 through 110, the previous all-time high, and go much, much higher.
Give us what's your thesis for, or scenarios, probabilities for where we go from here? Obviously, I know we talked about Bitcoin, but what's the timelines that you expect to see, and how do you think this will play out?
So I think probably the roughest month right now is probably the April month for us, because U.S. tax season is April 15th. So that's a drain in liquidity as people have to sell things to pay their taxes. We don't know how the debt ceiling is going to resolve itself. What is the Treasury going to do with their checking account? Are they going to draw it down to zero and then refill it back to 850 billion or some level? We don't know. But I think all those sort of questions will be answered April and early May. And we already know that Powell has caved. Like, you don't cut QT, tease QE, say that tariffs are not inflationary. That's just like economics 101. Yes, tariffs are inflationary, right? Like, it's just like, it is. Whether or not you want to admit it is just is different, that good or bad, but he's caved. He's He's firmly been fiscally dominated, and he's going to do what he needs to do. He'll try to spin some sob story about how he's still trying to fight inflation, but doing QE in the Treasury market and whatever, that doesn't really matter. At the end of the day, he's on side. And so I think that, Trump invested his plan, which is to rework the global trade system, which necessitates capital leaving the U.S., foreign capital, who no longer have dollars generated from trade surpluses. They have to leave the Treasury market. They have to sell stocks or not buy as many as they used to. And therefore, we need another source of liquidity, and that's the Fed, and that's the commercial bank. So the final nail in the coffin will be when the Fed agrees with Bessent to end the supplemental leverage ratio. And once that's done, then it's just like we're going nuts, because when you allow banks to essentially create money and buy treasuries and suffer no capital charge to their equity, then they could do that in infinite size. And so they can finance the U.S. government at whatever price needs to be financed at. And this will be the model. And once the Americans do it, then the Europeans are going to do it to rebuild their defense base, right? Mm-hmm. The European banks are going to load up on Bunds and OATs and, Italian bonds and whatever, right? To build another juggernaut military. And then China could say, oh, great, we can now allow the currency to dirty float, because we know it's not going to depreciate against the dollar, because the dollar is printing so much. And so we can now unshackle our money creation onshore, because right now China is fiscally stimulating on one hand, but then the PBOC is tightening liquidity to keep the yuan at around 7.3 versus the dollar, which is kind of self-defeating policy. China can reflate if the US is reflating. And then, Japan will do what they do. It doesn't really matter. So I think this change out of the US will allow the Europeans and the Chinese to print the money that they were going to print anyways. It just accelerates the timeline. So I think, we could still chop around until this summer, but I think it's be very clear, and the sentiment's going to change. The consensus sentiment will change to, oh, everyone's printing money by the third quarter. And given that Bitcoin should lead that, we should be much higher by then, and then we can hopefully make 250,000 by the year end. I hope.
Do you think that's a realistic target by year
Absolutely.
end? Yeah.
I mean, we went from 70 to 110,000 just because Trump said he was going to do some regulatory stuff. Not to say he's not going to do it. May not be in the timeline that people thought he was going to do it in, but that's what people traded on. And it took the market up, almost double just based on some words. So if we have words plus a lot of printed money, then I think the sky's the limit.
Okay. So you think chop through summer, unknown timing on exactly when money printer and liquidity starts to come in, but you think it comes in sometime end of summer, Q3? I think
the actual money starts getting printed sometime, second or late second quarter, early third quarter. But Bitcoin's going to trade in advance of that. If this becomes the expectation, then Bitcoin will rise and it'll probably take out the all-time high because, okay, we believe that in the near future, the money printing is coming, and all these other bad things that we were focused on from 110,000 to 76,000 don't really matter anymore.
Mm-hmm, mm-hmm. Bitcoin trades, it's so correlated to equities right now, which is such a somewhat misleading thing for it. We market it as digital gold, and gold isn't correlated to equities, but Bitcoin still is. Talk to me about Bitcoin's correlation to equities and how you think that through and where you think equities could go from here.
So I think Bitcoin is correlated to global liquidity more so than equities. It's
I'm so happy you said that.
It's just that NASDAQ is very correlated.
Also correlated to global liquidity.
At the moment to global liquidity. But I think, big US tech has been the massive outperformer of the last 2 decades. I think that outperformance is over because at the end of the day, if the Chinese, the Japanese, and the Germans are no longer exporting as many things to the U.S. because of tariffs, because Trump and Bessent and Rubio and Lutnick are very clear. We want to reduce this trade balance. The flip side is then the financial account balance has to fall, which means there's less dollars able to buy U.S. assets. What have people been buying? They bought U.S. tech. That's what they bought, And so, yes, you could have the Boeings and the Lockheed Martins of the world doing very, very well. But, I'm not going to pay 30 times earnings for some tech stock. Maybe I'll pay 20 or 15 or whatever it is, right? So the earnings could still be there. The multiple we pay goes down because the foreigners left the market because mathematically they don't have the dollars to buy the stuff. Or to stimulate their own economies, they need to sell the stuff, bring capital home, and rebuild their supply lines. The supply chains, just like the U.S. is doing, or their militaries. So I think U.S. tech will underperform the general rise in market. Not to say that it's going to go down, but I think you're going to see less and less correlation between Bitcoin and tech because the global liquidity won't flow there. It'll flow to gold, it'll flow to crypto, it'll flow to maybe value stocks, or whatever that the investment community thinks that is. But I think U.S. tech is going to falter. And then we'll sort of dispel this notion that Bitcoin is correlated to equity. It's correlated to liquidity. Everything's correlated to liquidity, but stocks just have this additional component of earnings multiples and this very high percentage ownership of all sovereign funds and very wealthy people who had to put their money in the U.S. because it's the only place liquid enough to store these excess dollars created by the imbalance that Trump has been very clear he wants to solve, wants to correct.
We're worried about what are the scenarios that you're watching that you're thinking, okay, if this happens in the next 3 to 6 months, then I'm concerned. Anything that's on your mind there?
I think it's an ideological thing. So during 1929, in the U.S., Great Depression, Herbert Hoover presidency, Andrew Mellon was the Treasury Secretary, and he has a famous quote when asked about, what do you think you should do about this stock market crash and the depression? And something he was like, liquidate land, liquidate labor, liquidate capital, ... It'll force people to live within their means. They've been living too high, and we'll live better if we sort of deleverage the system. Now, obviously, that's a very painful message. not very good to anyone really in the short term, and politically unsuitable. So, Hoover is excoriated by historians as not printing enough money, and everybody loves Franklin Delano Roosevelt because he did the New Deal and printed a bunch of money. So there is not an Andrew Mellon type figure in global politics, US or anywhere else. And so if we saw that the average person supported austerity, meaning, okay, all these government programs are going, all this government spending is going, for rich people and for poor people, everybody's fucked, right? We're going to take all this leverage out of the system, take some pain and rebuild from here. Then I would be very worried for crypto prices in fiat terms. But I don't see any politicians with that message. Maybe the only one is Milei in Argentina, but that's a very specific case where they've did 50 years of Peronist government money printing. It took them, 5 decades to get to the point of having a Milei. I don't think that this is not what the U.S. person is saying. And I don't even know what Trump said. What does Trump say? Hey, I'm not cutting defense. I'm not cutting your Social Security check. I'm not cutting your Medicare check. Yeah, okay, there's some fraud and waste in the government. I'm going to go and deal with that. But I'm going to get deficit from 7% of GDP down to 3%. But it's still a deficit. They're not aiming for a surplus. So the debt still grows exponentially. So again, there's fundamentally no politician around the world that's saying, I want to remove leverage from the system, do a restart, and have a healthy balance sheet and grow from there. They want to run a high nominal GDP growth playbook, high inflation playbook to deleverage the balance sheet. That to them is less politically painful than running an Andrew Mellon type, let everybody get fucked, and then, let the chips fall where they may. Once we're healthy again, then we rebuild from there. So we get Andrew Mellon in power and around the world, yeah, I'm the worried for crypto. Absent that, I think we're in a secular rise in money printing.
You like DeFi because there's is the ones that
I like cash flows. I'm not sure it's going to be the highest price performing thing, but I like project with cash flows because a project with cash flows is going to be there
with real earnings.
The bent of our portfolio is not to take a lot of losses to aim for the 1000x, right? Trading the 50 million market cap coin because it's going to go to a billion, right? That's just not our game. I'll take a 2 to 3x on my capital, but I know I can put a lot more capital in it, and it's not going to go down 75% just because some dev fucked up something or somebody said something wrong on the Discord channel, right? That's not my game. Different game for a different type of investor.
And you said that you think a lot of flows are coming into these cash flow projects, these fundamentally based projects. Where do you think those flows are coming from? What makes you say that? You think that's coming from retail, or do you think that's coming from institutional?
I think it's coming from crypto holders, right? Anyone who holds Bitcoin, right? You're rich in Bitcoin. Okay, what do I want to buy? Okay, I want to buy the things that I use. What do I use? I use a DEX. I use lending protocols. I use stablecoin things, right? The things that I actually use. They've been around. I could see sometimes they're giving away some of their cash flow, either buyback and burn or staking revenue to token holders. I like those things. And I think progressively as, retail has gotten burned every cycle on, they've gotten less scammy over time, but like less shittier of types of projects. They're more discerning, right? Like people, I don't want a high FTV, low float token that's just going to get dumped on by the VC. Okay, that's a very smart way to look at it. So I went and I traded meme coins, which from a EV perspective, expected value, you were more likely to make 100x in a meme coin than you were buying the newly listed token on a major SEX. That's just math. And that's why meme coins proliferated. I think that, but there are some projects that survive this downturn. They're still here. They still work. We all use them. And so I think they're going to attract flows from retail people who say, okay, I want to participate in something other than Bitcoin. Let me use a project that actually has users, actually has revenue.
Even though retail will still go after the casino, whatever that casino is.
Yeah, of course they will.
Yeah. And I think you're totally right. There will definitely be a new thing at some point. Do you think we're going to see a bank fail in the US? Do you think now that Jay Powell said this, that that we don't need a bank to fail in order to get?
I mean, the only bank that failed, the only bank that they allowed to fail were the 3 crypto banks because they wanted to exact a pound of flesh. And that was it, right? Every other bank, I think there were 2 or 3 subsequent bank failures due to the held to maturity treasury issue. And they all were met with a sweetheart loan to JP Morgan or a bank like that. The bank bought the defaulted bank and they merged together and depositors were made whole. Bank failures are outlawed in the United States. Like you might lose, you might get a zero on your equity, but I think as a depositor, the authorities have demonstrated that they will not tolerate any bank failures. Maybe they will if it's a politically, the politics of the bank are the wrong way, whatever that is, don't know. But I think in general, there is no such thing as a bank failure anymore in the US.
ETH versus Sol, which one do you think wins long term?
I think ETH still has a possibility to win long term just because there's so much hate. And so usually when something is super hated, then it's the best performing from that point in time. I think Sol has an interesting problem that if the meme coin, fad has really faded for the time being, that's going to be a big hit to transaction volumes and revenue on chain in the Sol ecosystem. Yeah, Sol's going to go up in price for sure if everything's going up in price. But will it outperform ETH? I don't know. Will it be another L1 that doesn't have that baggage that could go up a lot in price? For sure. Obviously, I'm a big Aptos supporter. I think that they have some interesting things that they're cooking that could really juice their token price going forward. But at the end of the day, I think Solana it's been pegged as a meme coin chain, and that really worked in their favor in most of 2024 and early 2025. And now that I think that section of the market is going to be more bound for a while, they need to find the new narrative. But it's a very big asset that they've got to lift, right? So it's 70 billion or whatever market cap coin, big coin. So they need a big new source of transaction volume.
What would you be watching for from Trump or Bessent to say that would make you feel like we're done with the pain that they've been pushing us through and the change that they've been pushing us through?
Oh, I think my point is that, well, they haven't really even started. If they're really serious about this global realignment, now they're just having conversations. Now it's, I'm going to threaten you with tariffs unless you do whatever it is. We'll see how that works. But I think the message is that even the little bit that they've done so far has scared Jay Powell so much that he is now accommodating monetary policy. So if anything, they're going to go even harder because they know that the money is going to be printed by the Fed to buy the treasuries that the foreigners aren't going to buy anymore because of the changes that they're pushing through. So again, I'm not afraid of tariffs because Powell said he doesn't care about tariffs anymore. He's still printing money. I also, believe what they say. They're going to try to remake the global trade system. Fine. Okay, cool. But you need to buy for those treasuries and it's going to be the banks. Bessent was on All In podcast. He said, I want to get the supplementary leverage ratio exemption for banks. I think he quoted something like it's going to be a 30 to 50 basis point reduction in the 10-year yield. Probably could be. I mean, he's a smarter guy than me, so that probably is the case. At the end of the day, they're going to go harder. They have the money printer behind them to change the things they want to change and not have the ill effects of a destruction of the treasury market.
Arthur, been an absolute pleasure to get you on the show. Last question. Any bold predictions for the rest of this year?
Bold predictions. I think still the bold prediction is $250,000 Bitcoin by the end of the year. I think a lot of people are a bit scarred from this natural, healthy correction during a bull market, but we're still in it. It's still money printed. We're going higher.
Let me ask you this. Do you think that we continue to see the same cycles that we've been seeing? We've been in this 4-year cycle trend for several cycles now. Is that going to continue, or are we shifting into a different cycle or different
I think probably starting in 2017, we shifted into a global liquidity cycle. And for whatever reason, it's kind of aligned with this 4-year thing that we have in Bitcoin. But again, I only focus on global liquidity and I don't really care about anything else because at the end of the day, I view Bitcoin as technology plus fiat liquidity. The technology is pretty constant unless there's some massive change to Bitcoin core. Could happen, but not really in the cards right now. So it's all about fiat liquidity. What's the pace? Is it slowing down? Is it speeding up? What's the expectation? And I think if you use that as a framework, it's very instructive to identifying, a broad area of a top and a broad area of a bottom. Of course, you're never going to sell the top and buy the bottom. Like, don't even try. It's just a fool's errand. But as long as you have a general idea and, I don't feel so good about that. Or I feel great and everyone doesn't, but look at this. I see the money printing happening. I should be going along, blah, 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 right? So that's kind of how I operate. And I try not to be dogmatic in any, it has to be a 4-year cycle and the month of March has to be like that. No, everything is everything changes. It rhymes.
Just get on the dance floor, go with the flow, feel the music in you,
Yeah.
and get after it. Arthur, pleasure to get you on the show, my man. Really appreciate your time today.
Thank you.